Hello everyone, welcome to the channel. My name is Gabriel. In this video, I'll be talking about supply and demand. So if you trade supply and demand, please come closer. For those of you in the Telegram group that have been following our trading setups and signals, you probably have noticed that I pay attention a lot to supply and demand zones, right? So if you trade supply and demand or you are new to it, you should know that supply and demand comprises of three stuff. Basically, supply and demand are areas in which we believe that are capable, accumulative areas that hold price, right? And it's also believed that the big boys in the market capitalize on these areas, okay? Supply and demand comprises of three types, okay? So basically, they have order blocks. People that trade supply and demand pay attention a lot to order blocks. We also pay attention to order flows, and then finally, we pay attention to consolidative areas or accumulative areas, all right? So if you are in the Telegram, just like I mentioned earlier, you would have noticed that my own focal point all of the time, I like to pay attention to the order flows. So in this video, I'm going to talk about order flow. I'm going to tell us what it is, and I'm going to show us how to filter a valid order flow in every price movement. Without further ado, let's get started.
Alright guys, so this is a Telegram and we share daily trading signals and setup with our members. So please join for free. It's open till 31st of this month to be free. Alright. So guys, let's hop on the chat and let's get to deal with what we are here for today. Alright. So guys, if you look basically on market structure, you have to understand a little bit of market structure before we dive into this thing. Alright. So if you look basically on market structure, we have impulse, we have correction or retracement, and then we have impulse and correction and impulse and correction like so, no matter the direction. So if it's a downside, impulse, correction, impulse, and correction, right? And impulse. So this is how price basically moves, right? When it's in a particular trend. Uptrend creating series of higher highs and higher lows. Downtrend creating series of lower lows and then lower highs. Okay. And when we trade smart money, what we focus on, or when we trade supply and demand, what we focus on is what? Price breaking through swings, price breaking through swing, which we call break of structures, right? We have break of structures, and since price is significantly breaking through the previous swings and creating high and high and high and high, we're looking at what? An uptrend. And this break of structure is always our focus. Okay. If price breaks, we're looking for just pullback to create the lower high, sorry, the higher low, and then we can continue, right? Now, for those of us that trade smart money, we know that we pay attention to um, two staffs, all right? Two staffs after break of structure. One of the first thing we do after break of structure is to look for where liquidity is. Okay, and then after that we'll now look for a point of interest. Now the point of interest is where an order flow is going to come in for what we are looking at today. Okay, so the order flow is what we are basically going to look at today, and we're going to use this route to get there. Okay, so as a smart money trader, or as a smart money trader, yeah, when price breaks structure, what we are looking for is what? Liquidity. Okay, because here there's no liquidity collected yet on this particular phase. There's no liquidity collected yet. Instead, price has broken its structure. So what we are looking for now is price to collect liquidity, and then price to probably give us an accumulative phase, go back to an accumulative area, and then we can now join price to ride the trend from there. Okay, now in order to filter the liquidity, for those of us who have been watching my channel, we know that the first pullback or the last pullback, depending on where you're counting from, is always inducement. Okay, that inducement is kind of like fake. All right, it's kind of like fake. When they say inducement, it's kind of like an illusion. So it's an illusion for smart money traders to take trade from. Now, when you look at this particular impulse that breaks a structure, you know that it is almost not certain for price to just go direct with one candle to break a structure if you are on a significant trend. It's kind of like not it barely happens, or maybe even if it happens, it always have some kind of you know one or two candles that will do some kind of play around. All right. Now on an impulse that breaks a structure, pay attention to the price movement on that impulse. Okay, you're going to see that an impulse also comprises of what? Series of impulses and corrections, or series of accelerations and pullbacks on that particular impulse. Every impulse have this in it. If you don't have it on the particular time frame you're looking at it, if you switch to a lower time frame, you're going to find pullbacks on an impulse. So this is going to be our what higher time frame. This is going to be our higher time frame, right? This is going to be our higher time frame, and then on this higher time frame, you know that every of this pullback here is a downtrend on a lower time frame, right? Every of this pullback we are having on the higher time frame is a downtrend, and every of this acceleration we are having on the higher time frame is what? Is an uptrend. It's a whole different trend on the lower time frame. Okay, a whole different trend on the lower time frame. Now, when you look at it from the higher time frame perspective, there's always a particular pullback on the other trend that always have a significant drop, those significant pullbacks and all of that. Now, those significant pullback, first of all, we have to identify liquidity. And liquidity, like I said, is this one here. It's either you call it the first based on where market currently is, or you call it the last, since the last one, since you count it from anywhere and you call it whatever you want to call it, but this particular one is liquidity. Okay, the first one here is always liquidity. You're counting from top. If you're counting from base, is the last one. So from top, this is the first pullback. So it is always liquidity. Whenever market comes to it, don't ever interact, want to buy a price from it. Okay, that is liquidity. Now, where our focus is going to be are going to be the remaining pullbacks that are here. You see on a particular impulse, those pullbacks that you get, those significant retracement that you get when you have impulse pullback, those are what we refer to as order flow. This is also an order flow, but it is an induced order flow, so it is not correct to be an order flow. This is also an order flow. Okay, this is also an order flow, and then all of these pullbacks are all order flows. Order flow is simply where the accumulation took place before a significant rally. Before a significant rally. If you come to a higher time frame, you want to identify an order flow. The whole of this is an order flow. All the retracement you find price doing, they are all order flow. All right. So if you notice what price always do after breaking a structure, if you look at that whole pullback, price will find its way back into that pullback before continuing that price. If it doesn't come back into that pullback and go something from here, let's say from here like so, and push like that, it just means that the whole pullback, all of this pullback here have just been collected, and here has become the pullback. That's what it means. This one is kind of like a little bit advanced, but let's focus on our topic of the day. So when you have impulse and correction, which is what the basic phase of the market, 1, 2, and then 3, every correction that you find is always an order flow. Price is going to come back into that order flow before we have another impulse. So this is basically what we was looking when we started trading, and we're looking at support and resistance, but we failed to actually identify that the whole zone is an order flow. What we used to look at is just the support line. Whenever price just come and touch it, we want to buy, and then we get liquidated, and then price still go away. That is what happens. But what price actually looks for is the whole order flow. It comes to find the valid one, okay, and then plays out. Now, this is what an order flow is. It's always what the retracement in an impulsive phase. Okay. Now, how do we identify in all of these order flows? How do we identify which one actually should be the one that is high probable to play out? Because obviously we cannot tell that this must. It's just going to be we are having an edge to identify the most probable one. Okay. Now, one of the things that I've taught on this channel, I've spoken about discount and premium. So if you have not watched it, you can look in our videos to understand it. One of the criteria for a valid order flow is that it's just like the order block. It's also a supply and demand. Just like the order block, the criteria we laid out for order block earlier in one of the videos I have posted. An order flow can only be valid after a break of structure. That is the criteria number 1. There should be a break of structure before an order flow is valid. Okay, a break of structure. You cannot just price cannot just be in a particular rally without breaking any structure, and then you just want to calculate. Let's just say like so, we just have this push for the beginning of the whole trend, and then there's no break of structure, kind of like impossible on price. But you cannot just have another flow and then expecting price to just pull back here and then you want to buy. What happened here? You have to know. If there's no break of structure, whatever you find to be another block, another flow is not valid to be another flow. That is criteria number 1. Criteria number 2, just like the other block, make sure that this other flow have not been mitigated. When we say mitigated, it means price should not come back to it. If price have come back to this other flow, it means this other flow is taken. Whatever is here is waste. It's no longer valid. We shift our focus to this particular one. Or if there's any other one that is still valid at the base here, we can also use it. Make sure the other flow you have is not mitigated. Alright? And depending on where your direction is, make sure your order flow is within the proper discount or premium price. Now, this is an uptrend, right? This is an uptrend, and then we are looking to buy price. Let's take back our order flow there. This is an uptrend, and we're looking to buy price. And if I calculate from here to this top using my FIB tool, basically I can actually identify the, just looking at stuff, you can just look at where should be the half. All right, anything, since I'm looking to buy price at a very low, section, right? So anything that is below, anything that is above here is too high for me to buy price from. I cannot buy a product in a high price. I cannot buy a product high, because if I'm trying to sell it, I need to still increase the price, which might chase away my buyers also. So we need to make sure that price have dipped into this level before we look for a valid order flow that is here to buy price from. So the final criteria to identify an order flow, it should be within what your proper discount or premium, depending on where you're looking. So we are looking to buy here, so we're looking to what, to buy from discount. So the only order flows that are valid that I'll pay attention to is this one, and then this one. Since it is not mitigated, right? This is first criteria, it's not mitigated. Criteria number 2, we had a break of structure. Criteria number 3, it is what, in a discount level, because we are looking to buy. So it's good for us to buy in a lower section. So when price mitigates this order flow, it is going to make a lot of sense if I start looking for my buys or looking for criteria for my entries. All right. So there's sometimes you're going to find order flows just like this one, 50-50. This one is half into the high price and half into the discount price. This one, just like where it is being spotted on the 50 mark, that is, it's also 50-50, because it's called decisional point of interest or decisional order flow. So it might play out, it might not play out. And the only scenario when this is likely to hold price more is when there is no order flow at the base here. I'm looking to buy, so I should be looking for discounted ones, right? And then maybe the only one we have is going to be here. The only one we have is on the 50 mark. Okay, then at that time I'm going to actually pay attention to this. But if I have more order flows at the base, or maybe I have another one here, let's just say this last one is in there, and then I have this one here, and also have this one here. My focus will be on this one, because this is 50 mark. Okay, this 50 mark, we have inducement represented here. Normally, how market makers want us to think is just to think flat, but you have to think not like everyone. You have to think a little bit different from every other person. So if you're thinking like, okay, this inducement have been collected, so the next one should be valid, a lot of people will actually think like that. So market makers will like to play games here and then use this as the point of interest, because since there's inducement here, there are a lot of people that use limit orders, just like myself. You might just put your limit here, and then there's inducement, so price will take here and go. Price will just drop you out and then take here and go. So that is how to identify a valid order flow. That is what an order flow is, and those are the criteria to identify an order flow. So in order not to be biased, let's look at the bearish ends as well. So we have break of structures to the downside, right? And price is always pulling back to do what? The first thing we do as well, smart money, collect liquidity. After liquidity, we find something to mitigate. And it's either order block, order flow, or the consolidation areas. Like I said, I'm not going to be talking about the remaining two. I'm going to be talking about order flow, because order flow is basically what myself pay attention to. Just like the example earlier, we have break of structure here, right? And then on every impulse, you know that we are having series of uptrend. This drawing is going to be hard, man. It's just going to be like so. Please don't mind my drawing, eh? So we are having series of trend to come to what the where price is. The first one here, or the last one, depending on where you're counting from, is liquidity. Hold that at the back of your mind. If not, you're going to pay money to the market. So this is what, always liquidity. Don't interact with price here. The only thing you want to do with price here is if you have a sweep, you can sell, or if you have a break, then you can look for counter structure. That's the only thing you should do when you have when you see price interact with an inducement. So after the inducement, what we are looking for is what? Price to mitigate what? An order flow. Order flow is what? This retracement on this particular impulse. So we have here, we have one order flow. Is it valid? Yes, it's valid. Price is not mitigated. Then we have what? Another order flow here, and then we have another order flow here. Sometimes you will not have them a lot like this. Sometimes you might only have one pullback, which is inducement. If price takes it, then you can look for sell. That is a whole different trading. That's a whole different topic for another video. So let's just focus on what we are doing for today. So we have all of this order flow lined out, like I said. Now, criteria number one has been met because we have what? A break of structure. So anything here is now standing as a potential order flow. Criteria number two is what? Price should not mitigate the order flow. We can see that none of this is mitigated, meaning price did not come back into any of these order flows. So price did not mitigate it. All right. So they are all standing well. Criteria number three, we are looking to sell here. So we are looking to sell at a higher price because we are not the one that owns the product. So we are looking to sell at a higher price. If I pull up my Fib2, we need what? The higher price, meaning we need price above 50 points or above the 0.5. So this is one, this is two. This one is decisional because it's 50-50. And the fact that I'm having two, I'm not even going to mark this out if I was trading. I'm not going to mark this out at all. So we have this here. So if price potentially pulls back here or here, I'll look forward my confirmation entry and then get into my trade. Also, if you look at your risk management and you think that the level or how wide the order flow is going to be is okay with your risk, you can also trigger your entry like that with your stop below, and then you have your target as the week. You have your target as what? This level that actually started to reverse. So let's hop on the chart and let's look at maybe 2 or 3 examples. Let's just look at 2 examples in order to keep the video short, because I'm sure I've made this as easy as what's easy to you, whatever is easy to you. So let's hop on the chart and let's look at practical examples. All right, guys. So this is 1 hour time frame on jump 100 index. Okay. So you can see clearly we were having what? An uptrend, right? We are creating series of higher highs, higher low, higher high, higher low, and where do I mark it? Here, higher high, higher low. We have higher high, we have the higher low here, and then we have this higher high. Okay. So the fact that price failed to create what? A higher low and higher high from here and breaking through this last significant higher low, it means what? We are having a change of trend to the downside. Okay. So that has given us a change of trend, and that has given us a sense of what? Direction. Now let's look at this previous example. Let's look at this one. Let's look at a few examples before we actually look at the current side. So if you see, we have a break of structure here, okay, and then price push significantly to the upside before we have this drop. Now every time you see any place you see that price is having a battle, it means traders are actually working to it. Traders are actually putting their money on the line. Okay, now we have a break of structure here. That is criteria for number one. If you're looking for where price will potentially come, so that we can look forward potential entries. Now we have gotten break of structure, and this is what our impulse to the upside. Those of us that trade price pattern, you know that it doesn't make sense to start putting price pattern on this. This is going to be represented as an impulsive phase. Okay, and since it's an impulsive phase, we now understand from the illustration that every impulse, just like we can clearly see on the chart, has ups and downs. Just like this, we have this, we push up, we came back, we push up, though it is still what? An impulsive phase. Okay, so this is an impulsive phase. Now on this push up and push down, significant retracement is what we look at for what? Order flow, and the ones that are not mitigated as well. Okay, so since we have break of structure here, we have our highest level here, right? It means that the first one that we always call inducement is this one, because this is also a significant pullback on this particular stuff. We have this one, we have this, we have this, we have this, we have this. I think we have pullback here, so we have this one, and then before the significant drop. Okay, so this is what our inducement our IDM. Those of you on the Telegram, this always inducement is what I always mark out as IDM. After the inducement, we start looking for what our point of interest, which is what a valid order flow. And a valid order flow is just a valid retracement on that particular impulse. Now, a valid retracement that we can see, if you look at from the base, we have this push, we have that, and then we have this first retracement. This retracement is no longer valid. Why? It is mitigated. When price went out of it, you can see price came back into it. So this particular one here is now invalid. I cannot use it at another flow anymore because market makers or price have already come back to fill all of the inefficiencies here and collected all of the orders that were sitting here, and now price have what initiated above. If you can see that after pushing up, since we pushed up, price have failed to come back into this one. Price never came back into this. If you understand our candlestick, if you understand the candlestick confirmations to validate a pullback, you can see that all of these candles don't match any of the criteria to validate a pullback. None of these candles represent a pullback candle because none is taking any of their lows here. They are only opening slightly above the lows and going up. Okay, so it means that this particular order flow is valid. There's a break of structure, cool. It is not mitigated, cool. All right, and if I pull out my fib2 to check if it's in the discount level, you can clearly see we are in what the discount level. So if price comes back to interact with this guy, we are going to keep buying price. Or you can, and just like you can see practically, right, when price came to tap it, it went up. So this is how effective it is. Sometimes it's just a sniper entry. It gives sniper entry, just like this particular trade you can see on my screen. You can see it's a sniper entry. It just came back to mitigate order flow and then price took off. Okay, so that is how order flow works. So after that, we broke structure again. Since there's a break of structure, we'll be looking for what on the impulse that broke structure. We'll be looking for significant pullbacks that we can use as our order flows. Okay, so when price went, we have this. When price broke structure, we have this. You can see this candle meets criteria. This one here is white. The white candle meets criteria, and the criteria is that it took the criteria is that it took the low of the previous candle before it. You can see this white candle low is lower than the blue candle's low, right? So that is a pullback. So we're going to have our calculations like so. We have this push, we have this pullback, we have this push, we have this pullback, we have this, all of this pullback, but they were significantly taken by this one. Then we have this to the upside, right? So since we have that, this is one of the reasons why I mentioned to you that if you have an inducement and price sweeps it, you can look for what a continuation. You see, price swept this guy, and then we're looking for buys. So since price swept you and looking for buys, and it did not mitigate any other flow, the inducement will change to this one. Okay, that is a topic for another video, like I said earlier. So we have our IDM here based on the significant structure. And what is price looking for? Price looking for something to mitigate. And based on order block and order block criteria, we don't have an order block here. What we have here is what a retracement that is going to be what an order flow, which is this one. So you can see price came to the order flow and then price push up significantly. Also, after that we had break of structure here, and then we have order flow here based on the criteria. Why is it an order flow? There's a break of structure, price close above. This is what a pullback, which is what inducement. This is another pullback, our order flow. But like there's nothing that is 100% in the market. That's why we always pay attention to confirmation entries before we execute, despite the fact that order flow works a lot. We still need confirmations, further confirmations to actually use it in the market. Price came and then invalidated it, and that originated a whole change in the structure of jump 10 index. So there's a change of structure right here to the downside. The uptrend have now changed to the downside because we have broken a significant low, and what we are looking here is not going to change to here because now we're going to be looking at our significant pullback that is not inducement, that is meeting our criteria to be what our order flow. Okay, so from this impulse that broke structure, we have this. We have series of pullback here, but you can see they are all mitigated. This is a pullback mitigated by this one. This is another pullback mitigated by this one. Another pullback here yet to be mitigated slightly. So this is a significant pullback. We have this. It came up, but it did not touch that one. So we have this one here. This one mitigated this guy. Then we have this one. This one mitigated the previous one too. Then we have this one, which is what our inducement and all of that till here. All right, before the significant push. So since we are having all of these pullbacks, we need to filter one that is inside a premium level, because we are looking for sell. So we are looking to sell at a higher price, which is part of the criteria, and we look making sure that it is not mitigated, okay, which is also part of the criteria. So pull up your fib and then draw it from here to here, right? You can see this is unmitigated. This is like in so you can see this is at the premium level because it's higher than the 50, but the problem here is that this particular one is mitigated by this one. All right, so we cannot use it. It's not meeting the whole criteria. The only other floor that is meeting the whole criteria here is this one. You can see this is where it starts to this level at the top. So it is meeting the other flow criteria. It is not mitigated. So we are waiting for jump 10 to come to interact with it, and then we can continue the sales. Like I said earlier, we use confirmation entries to actually confirm that yes, this order flow is going to hold price. But if you look at your risk management, you feel like you are going to be cool with the risk entry, you can also pull up your limit orders and then you have your target at the base.
So people, I hope that have been helpful. I hope that was informative. Please don't forget to like the video if you enjoyed. Please say your comment in the comment section if you have a suggestion or a question to ask. Please subscribe to our channel if you are new. Thanks for watching and stay highest.